YouTube? What's up, YouTube? How you guys doing out there? This platform here you're looking at is Webull. If you want to get you some free stocks, I always like free. Take advantage of the link you see in the description below. You get you some free stocks. Let me do this real quick before I miss out on the opportunity. I'm going to talk about it as I'm doing it. In this video, I want to talk about when is a good time to dollar cost average when using the MACD. Me, myself, this is what I do, okay? So whenever I see the MACD has its space in between the lines and it's in the down position, as you can see, this position drop. Whenever you see the highlighted number, that's going to indicate the new low, all right? So I'm going to go ahead and dollar cost average real quick. Let me just do it and stop talking. Hold on, I don't want you guys to see that. Okay, I don't want you guys to see my passcode. So I can do this fast, I'll go ahead and put a market order. And I want to put $5. Okay, one of the reasons why I'm also dollar cost averaging, I'll explain real quick, is because the price as well as the asking price, I probably missed it, but not that much. We'll see. Let me see. How can I go? Well, that doesn't matter right now. The asking price dropped below the asking price. This is the asking price, okay? And basically the asking price is people that are holding the position, whatever, people holding. So for example, let's say right now I want to sell. The asking price is $75.94, okay? And if I want to, all right, let's do this again. So let's say I'm the one holding it, and you're gonna buy it. That's the asking price. Okay. The bid price is, I forgot how to explain it, so I don't explain it wrong. I just learned this. This is what they call the spread. All right, so you can go ahead and Google that. What is the spread to get an understanding? But in this video, we're going to talk about dollar cost averaging and why I did what I did. All right. Let's go back into history a little bit. Let's put it on the 10-minute so you can see it better. So you see I have my I made my support, my resistance, and as the price broke right here, it broke the resistance. So the resistance became the support right here, okay? And this was the new resistance, all right? As you can see, the price did not break, okay? Instead, it went back down, which is okay, all right? Go back a little more. As you can see in this area, the price broke the resistance, okay? And it also broke the support, but it got stopped, okay? It came back up in the zone and it broke out, all right? So basically what's happening right now is the same pattern is going to repeat itself, but just in a different time frame. All right. So stretch this out a little bit. As you can see, right now, it's in this time frame. When you see it break a little bit, but get stopped, and it starts to climb back up a little bit, that's a good indication. All right. So what typically happens? The position, it creeps up. Instead of doing an uptrend, it'll creep up real slow. Okay, that's what it looks like when it does that. Really slow. It'll get here, but over a period of time. All right. So what I do is, what I like to do is, I'll just jump in and jump out. It's not going to be this perfect, but that's the strategy I use. I jump in and I jump out. Buy low, sell high. That's what that means. When you hear that. When you hear buy low, you're looking for the low point from a high point, and then you're just going to sell when it's high. Okay, as it recovers. Okay, now this can happen in any one of these time frames. Okay, time frames are very important. Okay, time frames are very important. Why is that? What happens in this time frame will be different in this time frame. What happened in this time frame will be different in this time frame. So you can make different plays off of different time frames. And basically what a time frame is, when you're looking at these candlesticks, each of them represent a time frame. 1 minute, 2 minutes, whichever one you choose. Okay. So let me give you an example. Right now we're looking at the 10-minute. Okay. So at 3:10, a new candle will open, right? So I can kind of look in the future and get an idea for the next hour what's happening. Okay. Each time frame, everything still applies, just the time frame is different. So for example, the MACD, this is a nice position. Okay. And when you go backwards, looking at your support and resistance levels, you'll see that you'll see the same behavior. All right, it doesn't really change that much. I go into the 2-hour. So looking at this, the 2 hours, okay, 2-hour chart. If I was trading on a 2-hour time frame, I see purple, I see green, I see purple, I see green, I see a pattern going on here. What's next? Doesn't take a rocket scientist to figure out what's next. Now, in situations where you make an entry, but it doesn't go your way, okay? So for example, I could have taken profits when it reached up here, but I want to take profits at around $80. And because it dropped right here, I'll just dollar cost average. And if I was making a day trade, which is buy and sell on the same day, and it doesn't go my way, it now becomes a swing trade. I'll make it a swing trade. And now time is in control, and I'll just dollar cost average until I'm in the green. So right now in Litecoin, I am down 1.24%. Now, if y'all remember my nice old goody old chart that I like to use, we right around here somewhere. Okay, so when I see this is a good indication. Why is that a good indication? Because the position has not dropped, like, all the way down here. The further it drops, the harder it has to go up, the more work you got to do to get back up into the positives. Okay, so when a position only drops a little bit, look how far away it's from being in the positives. Okay, this is the method I came up with in my head. You'll come up with different methods as you go along as well. So this separation that I see from here to here is not far. Okay, so it's gonna do its little thing, wiggle waggle wiggy wigga, and then it's gonna push through this one. All right, let's look at the high before this high. We're at 76.57. There was another one in here that had I'm not going too far back now. There's one more close. It was like 80 something. Make it 10 minutes. Did it ever reach that high? I can't see it for whatever reason. Or did it go that high or not? Alright, I think it was over here somewhere. It might be, let me see, go to the daily. There we go. Okay. So when you go to the daily, you can get a bird's eye view more. Alright. So here's that previous high. The previous high is 84.55. Alright. So we get this was a high, and it made a new low. And if it go lower, then that could turn into a downtrend. We don't want that. But anyways, until next video, until our taking profit video, because the next one I'm gonna do is gonna be profit taking. A lot of my videos, they're not gonna be scheduled as far as this gonna happen, this gonna happen. I'm gonna teach as I go along. I throw my tips in there, what I learned along the way, why I do what I do, what I see, how my mindset is. I'll tell you the mistakes I've made, stuff like that. Alright? Until next video. Peace. Before we leave. See, now if I have more cash, or the dollar costs more. So because I don't have more cash, I leave what I have left. So I can throw some little dollars on it. The little dollars add up. $9 to buy a power left. So I'll save that for later during the night. A dollar course, a dollar here, a dollar there, until I get out the position and repeat the process.